All right. Hey there. Welcome, everybody. Christopher Franks with Texas West Capital coming at y'all live here a few minutes after 11 a.m. Central Standard Time on Friday, the 17th of November. Tomorrow is my birthday. Send gifts, lots of gifts. 2023. Coming at you live here from just north of Houston, Texas. As always, hope you guys are doing well. So the big talk is going to be, is Bitcoin going to dump? Is it going to drop down to 32,000? Retest that larger range, or are we going to see it pop up from here and kind of, spank everybody for being so dang Debbie Downers over here, We've also got lots of charts we're going to look at as always. We've got S&P SPY stuff. We've got, oh my gosh, I don't even know what we've got here, gold and silver. I'm going to pop up an oil chart. Fibbo is going to be here with me, as you guys know. So, or hopefully, if not, now you do. And he's going to take a look at some charts as well. Don't ask him about oil. He can't do that. He can't talk about energy. It's his day job. But I can talk about it. And I'm pretty damn good with it. So you can listen to me on that. So lots of charts to talk about here. Lots of things to look at. I've got some, I've also got, if we can fit them in here, some stock charts I'm going to look at. We've got MicroStrategy. Always we're going to look at the DXY, of course. I've got PayPal, which I mentioned not too long ago, right at the bottom on Twitter, X or whatever. So if you guys are following me, you had a chance to get in there, you'd be up pretty good already. And some other charts we've got going on. So hopefully you guys do well. Who's doing well? Everybody doing great? We're having a good time. We ready to do our thing? I see we've got a Deadly 123. What's up, man? I got Brian. I'm gonna totally destroy your name, I'm sure. Is that Mocha? I apologize if I screwed that up, but good to have you check it in here. Win the Texas barbecue all the time, man. I'm in Texas, of course. By the way, guys, hey, make sure real quick before we get into this, please do me a favor, like the, wherever you're at, if you're on Twitter or YouTube or Twitch or Facebook or wherever, like the video, like the post, add a comment, follow, subscribe, man. We'd love that because that's the only way I can get out there. If you appreciate what I do out here, that's all you got to do. And it helps the algorithms kind of push me out there a bit more so we can get other people to stop being so negative when they don't need to be and start making money and, and cautious when they need to be. And, just no FOMO, just real stuff here, right? So anyway, good to see you there. AAM says, happy birthday. Thank you so much. I appreciate it. Let me see here. Kimazabi's here. Bastian Smith. Good to see you guys. And look who's here, guys. Mr. Fibba Swati. What's up, man?
What's happening? Happy birthday.
Hey, I appreciate that, man. I got to get those sound effects. So I came in with that good, when I brought you in there and I could have had like the fake, audience cheering thing. And man, I need to do that. I'm too boring here for everybody, right? Hey there, Mr. Riley. Yeah, thank you for the Solana video, man. You guys check that out if you're on X. I posted it on there. Funny little Solana, X breaking up with him, and Solana keeps going up, and it's pretty good stuff. So anyway, Mr. Fibaswani, how are you doing, man?
Doing well. Been pretty busy this week. I had to be in the office a lot this week, so other than that, it's been going great.
You do realize the only time we ever see you is at your house, right? So we're kind of not really sure if you do actually have another job outside of it.
I do.
So I'll tell you what, man, we've had an interesting week here. We had a lot of profit taking there on alts last weekend into the beginning and mid of this week. Usual suspects kept running there a bit, Rune, AVAX, stuff like that.
Mm-hmm.
I hear a lot of people talking about, man, I can't wait for Altseason. Man, we've got a lot of alts doing a lot of things. I would say, at least you have to say, I think it's kind of started somewhat. We've got like this kind of jump start into it. What do you think, man?
It's looking great on a lot of the different alts. I basically go on my bull and bear zones, and once that thing cranked into the bull zone, and we've had some really nice sells and buys and sells and buys on the way up. On a lot of them, and a lot of them are running in tandem too. So one thing that I always kind of tell some people is don't get overextended by buying all of them, because they will move in tandem pretty much.
Yep.
So if they start to crash, you don't want all of them to crash at the same time. So, just watch exposure when it comes to the amount of alts that you're actually purchasing. is what I kind of keep people in mind on that. So,
Up there, man.
but it's working well, definitely.
I think a lot of people, they come in when they first come into crypto and they're like, oh my God, so many opportunities. I want to buy this. I want to buy that. I want to be this. And they listen to everybody and their grandmother online who gives them all these reasons why all these companies have great teams and how they're doing so great. But man, you're like me. You've been in this a bit. We saw 2017, we had the ICOs and all the dumps that went on there and the rugs. And I think the rugs may be even worse now. Just about anybody and their grandmother, it seems like, can create some stupid sounding coin and get people to put money into it, because everybody's just, a lot of crypto Twitter actually isn't trading. I mean, would you agree with that? It's just like gambling, just like buying something and hope it goes up, right?
Yeah, that's what I get a lot of messages from people asking stuff like that. It happens a lot, unfortunately, but I mean, it does happen a lot.
Yeah. And so, again, guys, you want to be careful out there. You don't want to just, God, you don't want to just buy something in hopes that it goes up because it just came out. It may happen. It may not. The odds are, if you do get in it, you're going to get out well before it ever gets to this big point, some big, huge thing. Beyond that, even if you do hold on, it goes up there, the odds are you're going to lose all that money and then some, because you're not actually doing it based on trading skills. There's luck. And it's this whole kind of casino lotto mentality. I talk about it here a lot. And when you get those kind of rewards without actually doing the real work, right, and doing the things, you have to be honest with yourself. Did I just get lucky, or am I really that good? And too many people come in, they're new, and they're like, damn, I'm good. And then the market slaps them in the face, and they say, damn, I'm not so good. What the hell is going on?
Yeah, I drew that little chart in Paint, and I threw it out on Twitter the other day, where it just had the line going up. As price goes up, more TA experts start to.
Oh, I saw that. Yeah. Yeah, if you guys are follow Fiboswani, man, on Twitter, X, whatever you want to call it, Fiboswani.
But I'll tell you what, though, if I had $1 for every tweet I read that says, "Hey, what's the next 100x?" It's like, come on, people. I mean, yeah, there's going to be 100x's out there, but let's not try to. I mean, there's so many of them. Show me your 100x coin. Show me this. Show me that. Like, how about learning a little bit more on how to enter and exit, and then you'll be okay that way.
That's exactly it. Because if you consistently lock in profits, guys, you don't have to get the 100x, and you likely won't. Okay. And
like I said, you might get lucky. You might get lucky. Yeah.
Yeah, you might get lucky, but you're likely going to lose it if you do. And the key is to learn how to trade, to learn proper risk management, to learn how to enter and exit properly so you can consistently lock in profits. That's how you become a trader. That's how you build wealth. That's how you become consistently profitable over time. You guys are going to fall into the same trap. Every new trader does the same thing. I fell into when I first started. Fiboswani probably as well. When you first get in and you're looking, you think it's easy. You're just looking for the big return on the little bit of cash. And that's just not the way it works, guys. You're going to lose a lot of money. All right. So Mr. Fiboswani, you want to jump into Bitcoin? People might be hearing, our platform going off there. People in the chat kind of talking back and forth. So let's take a look at what Bitcoin's doing here.
Yeah. I'll start out on the 4 hour here. It's this has a lot to do with how my system works, but right now we got back into the bull zone back here and had this nice run up, and then kind of settled out to where it's consolidating a little more. However, it did go into the bear zone right here on the 4 hour. But the thing that I watch for is once this went into the bear zone, this threshold, which is red now, these red fibs sets up a previous shallow fib. So this was the shallow fib that was in this previous threshold. And since it went into the bear zone, one of the things I look for is 3 consecutive settles underneath that previous shallow fib. So as long as even though it went into the bear zone, it's still not a sell order. It's really saying keep your longs while it's consolidating. It is something along the lines of if you do have excess exposure, I would say, once it goes into the bear zone, you should limit that exposure, but you still want to be long the market based on this, because even though it went into the bear zone, it didn't break trend basically. So right now we're still in this area of consolidation. It went back into the bull zone, which gave us another buy signal to go back into it. So the targets that we had based on these thresholds back here are still in play. So right now, being long the market, the interesting thing is that the market came back down while it's in the bull zone here. It tested the bottom right here, but so far it hasn't broken back into the bear zone. But even if it went back into the bear zone right now, you still are not underneath that previous shallow fib from before. So right now, that 33,755 is a pretty strong floor for me on the 4 hour. But as this is coming down, the one thing that I like to see was it bounced right off the 141%. So you got this little zone down in here while it's in the bull zone as a spot to where buyers could come back into the market. Now, I'm not going to buy there, but that's a spot that I like to see it bouncing off of that as it was testing the bull zone. And right now it's, maintaining structure. So consolidation is what it is. And I think once we get back, these two highs right here, kind of I don't know if you call it a double top, but it's, you got this 38K right here. I think once we get above that, I think that's when you're going to get a lot more buying interest in the market and start to kick this thing back up. But right now, the longs that I've had on here, the next target is 41.6. That comes off of, I just did the trend-based extension off of this. This was when it started up to the high and then down to the low of that bear zone. And then the next move up is the 61.8% level that way. So that's something so if you want an earlier target than some of these other ones, 45.8 would be the next one out. And then I had a target of 48, which has been my 48K for a long time. And that's that longer term that came from different time frames. But right now, sideways to higher is still the call until it starts to break down into that bear zone. On the daily, we're still in the bull zone. Correcting back from being kind of overbought. Hit the high there and started to come back down. But the shallow fib for me is that 33.5. So the way this kind of works together is if this comes down to this previous shallow fib, basically if the 4 hour goes into the bear zone, I will buy the 33.7, which is that previous shallow fib, while it's in the bear zone. I would have bought it if it would have went down this last time, but if it actually gets back down there again, that's where I'll actually add longs. And then 3 settles underneath that line, I'll stop out. So that 33.755 is a key level for me to buy on the 4 hour. And it's also the shallow fib on the daily. So if that actually gets down in here, I'll be buying the shallow fib while it most likely maintain the bullish zone going on a little bit more of a longer term trend target. So another thing I like to see is I got the trend based extension here. The top of this previous zone way back here at 42K matches up pretty well with the trend based extension right around 41.8.
Yep.
My target is actually right around 40K on the longs that I have from being on this stretch to the upside. But right now everything is looking still pretty good. Just in that area, consolidation sideways to higher is still going to be the call. And then when you look at the weekly, this level right here, it broke this 61.8% level at 35,312. That right there, when it came back down and tested and bounced off of this, it's kind of hard to see a little candle right now, but it bounced off of this. And right now, it's the second weekly settlement above that level.
Okay.
If we settle this week and then next week, that will be a really, really strong signal that 48K is going to be the next one to watch.
Yep.
But right now, it tested it and it has bounced. But that 35,312 to me is a pretty good support level from a long term. That's why I don't even think, based on what I'm seeing on these charts, I think we're finding buying interest before it even gets to the shallow fib on here. So, which is a good thing. I use the 38.2 and the 61.8% level, but a lot of people could be using the 23.6. So you might be able to get that. I don't use it in my system, but other people can use it for even a shallower fib.
Shallow fib?
Yeah, shallow fib. So right now we're actually finding buying interest a little bit shallower than where the 38.2% level is, which is a good sign. It's just it tests patience. That's what I'm getting a lot of tweets about. Is this is a practice in patience, because while we're consolidating in this threshold, the reason I like thresholds is because that's where the emotion runs the highest. Because right now we're at this level of like, okay, we're right on the edge of this bull zone, especially in the 4 hour. This is where emotions are going to ride the best. Like we're right on that edge. So everyone's going to be on edge. Like, oh my gosh, this thing's going to crash and we're going to be back down to 20K. And you start getting these emotional, that emotional talk out there. But right now, for me, taking that emotion out until this breaks into the bear zone, I don't want to get all worked up about it. And that's why I like my system to take that emotion out of it. That's really what I'm trying to do. And while it's consolidating, let's just let it ride and see where we're at there. So that's where I'm at on my levels. It would be interesting to see where you're at, Chris, because does that 35 make sense? Does that 33.7 make sense on the downside? But right now I'm sideways to higher, and I'm still holding my longs until it tells me otherwise.
Coming up short on the, getting that buying power before the, the shallow fib. I mean, the way I look at that, it just shows that the market's just that bullish. You can't get a proper pullback.
Yep.
To what you would look for. So I definitely like the looks of that.
A lot of buyers that are just waiting.
Blacktooth Grin. He seems like a very Debbie Downer, but he says, are there any market gurus or coaches in the game showing their trades? We do. Fibbo does it every day, all day. Of course, Fibbo's day job is TA for a company. But, I've done it many, many times, not just with our group, but publicly on X when it was Twitter, X, whatever it's called, posted my trades on there. So, I mean, yeah, we don't not do it. But, again, guys, you have to understand it's not about what we're doing. It's about you learning so that you can do for yourself. That's the whole thing. And that's what we're trying to do. You're trying to give you information, trying to give you this understanding of markets and whatnot so that maybe you can have better trading days as well. So this is the bigger picture here. Again, this is what we've been talking about since back over here. Again, speaking of trading, I was trading this with our group, rushing home from the from the movie theaters. The movie theater that day, I think we saw whatever that new Jurassic Park movie was at the time there. And I took my son to see it, came back, looked on my phone. I was like, oh my gosh, that looks like a bottom for me here. Rushed home, logged on, started trading with everybody there. But, at this point, started talking about accumulation beginning over here, which it's done, and we've gone through here. Now, I've had this idea of this 1-2, 1-2, since we've been doing this. I do have an alternate count that I've talked about a few times as well, which is the idea that maybe this is actually a 1-2 here. So you would get basically a 1-2, and then you get a 3 with a triangle as a 4 here and a 5. And so that gives you then 1, and then still a flat here. ABC is a 2. And breaking out higher. If this alternate count is correct, wave 3 has a minimum, excuse me, can't get it out there, a minimum of expected target of 51,950. Now, again, if you guys have been following me, you know that, we had targets down in case it broke down, but I continued to talk about this, the idea that this was a flat here and we were likely heading up. And once we broke out, we get a good breakout here. And so, again, the title of today's show is, is Bitcoin finally ready to pull back to 32,000 or will it rip higher, right? And so when we look at this, why is that the title? Because everybody out there has been saying since we had this breakout that we have to pull back to 32,000 here, which is basically the top of, kind of this 32,000 area here at the top of the range. And we didn't get that. Instead, what we have is this overlapping rally here, higher highs, higher lows, up into the daily R1 pivot here. And so price action and volume looks like this is reaccumulation on the rise here. And if it is, we should expect a pop out of it. And that would make sense. A lot of the times we get the breakout followed by the pullback to retest as support, right? But not all the time. And if the market's really bullish, what you'll get is this accumulation as it's rallying still instead of getting that pullback. And that just leads to the next push up. Now, interestingly enough, if we get this target here that we're looking at, this bigger target up here for this wave 3 around 51,950. Let me see if I can do this here. I can't get it. We pull back to wave 2. I mean, we're looking at 38.2 or 50% on the pullback. It pulls us back right here. Now, something I talked about when we were here was the likelihood that we would get a strong breakout that gets us through this, and then we don't actually get back to that 30,000 area, 32,000 area. We just kind of pull back to this sideways, which I expected would create here and do it. And so far, we're kind of following that. Again, it's that thing I've talked about a few times before, more than a few times before. We're kind of following that there. If we zoom in, let's see here. If we zoom in here, there's that pop. That's why you kept hearing all the popping going off with our platform there. Our users, our members were excited because you have this big pop here. What was this? This was a low of 35,964, high of 36,800. So $1,000+ pop here. Took us out above here. What I need to see, what I'm looking for right here, is a breakout and a close above this swing high here, above the hourly pivot. If we can get that, that should signal that we're done here and we're going to head up higher. Breaking out above this swing high right here at 37,619 on this Bitcoin USD Bitstamp chart is going to add confidence to the count. And if we can get that, all of a sudden, it looks like we've probably got a rally up to, let me see here. The idea that this would be a 1 and a 2 here. And give us a minimum expected wave 3 up here around 40,000 and a half. 5 waves up around 41,870 or so. So again, kind of falling in with Fibbo's kind of targets he's got on his.
Yeah, mine was 41.6. So
yeah. So right up there as usual, guys. You see how that's working. A different way of trading, still coming to the same targets. But yeah, so right now I'm watching. This was a good pop right here. For me, it looks to me like this is a 1-2, and then this is a 1 and a flat is a 2 here. And so then this would be like a 1-2. This would be a 3, get a 4 and a 5. But yeah, so again, getting a close above this hourly pivot area here is going to likely suggest that we're done there.
Because we were coming on.
Do what?
It popped higher because we were coming on the show at noon.
Oh, well, of course, that's what it should do. There was a period of time when I was doing these lives a few years back, and when I was doing it twice a day. And 10 in the morning, I'd do it. And it was like every time I'd do it, every day I'd do it, market would drop at 10 a.m. I'm like, are you kidding me? Every time we started the show. That was not a good feeling. But yeah, so big thing is, close above the hourly pivot here. And then we want to see a close up here above 37,619. And then I'll be looking up here toward, 41,870 at least on this current local kind of rally here, right? So
let's do it.
I mean, that's where I'm looking. We got a bullish cross down here on the Stochastic RSI just popping out here on the 1 hour. What does that 4 hour look like? I mean, that 4 hour almost reset down and oversold. I like the daily. We reset down here and oversold. And then we've got this, right here from this swing low to this swing low, you've got this hidden bullish divergence right here, lower low here on the RSI. And so, of course, you had, this big bullish engulfing, big move back down, rally back up, and now here we are trying to push higher. So overall, again, I'm like you. Overall, looks like sideways probably up.
Yeah, sideways to higher.
Yeah. And I don't.
Real quick, what is your like the way I approach it is if it gets 3 settles under 33.7, that's where it flips the other way and it negates what I'm doing. What would negate your movement here?
If we're looking down, let me get over here and pop this over. All right. So if we're looking down, not
that I want to be a Debbie Downer, but just in case.
No, it's good. It's good, right? It should be right around this area right here, this 34,530. I think if we break down through that, the odds are much higher that we're probably going to get to that 32,000. But here's the thing. People are freaked out about that, right? But let's take everything off here. At the end of the day, we rallied up through between the pivot and the R1, hit the R1. usually we expect a retest of the pivot, and that's right there at that 32,000, right? So, I mean, that would just be par for the course of what we normally expect if we're trading pivots. If we get this kind of movement into the R1 like this, sideways into the R1, usually we expect a pullback to the pivot. But if we come in sideways like this to the R1 and we pull back just into this congestion and it doesn't get any lower, like this is it, that's, that's just telling us that the market's extremely bullish.
Yeah.
And most times through that, again, I've said this before, we'll rally up to the R4, sometimes beyond the R5 pivot up here. So again, that R4 sitting there around that 52,000 area. And, if we look at this, that's right up, that's the wave 3 right there. Now, does that have to happen this month? No, it doesn't have to. But generally, if you're just trading pivots, see, these are the things that when you pick one way of trading something and that's all you do for a while, for me, it was pivots for about 2 years. You pick up things like this. You learn how price generally tends to act around that system that you're utilizing. The same way that when you're using your threshold theory, just because it does this thing, normally that would be like a buyer or seller, or whatever, but based on what you're used to using it with and how it gets there, it might give you pause, and so this is just something, and I've never seen anybody ever talk about it with pivots. I teach so many things when it comes to pivots, and this is one of them, and it's one of the more aggressive, awesome things that I've learned. But yeah, if we do get the pullback, it's par for the course. It's what we normally do. We get a pullback 30. There's nothing bearish about it at all. But man, oh man, if this holds here and we pop out higher, like you and I are both kind of thinking it may do here, that could get us really some significant rally up there. Now, again, nothing's guaranteed. The only thing that's guaranteed trading is that you're going to lose money from time to time, right? And the newer a trader you are, the more money you're going to lose, the more often you're going to lose it. Okay. Which again, guys, is why the number one most important thing that you need to learn first and foremost, if you really want to trade, is proper risk management. Okay. Proper risk management. You have to learn it. If you can't learn that, you're going to lose all your money before you actually learn how to trade and get consistent with it. But man, it's open there for it. We'll just see if we can get that. And got a lot of potential upside on that there.
It's a pressure cooker. That's what I call it. It's a pressure cooker.
There you go. Right. And
everybody's pressure, it'll explode.
Well, and everybody's looking for that 32,000, that retest. Ever since we broke out, they're saying, man, 30,000, 32,000, you have to retest. You have to retest. You don't have to. Price is always going to do whatever it's going to do.
Yeah. One thing that if this does end up holding the support where it's at the moment, what it's like is a lot of people are going to short, thinking that it's going to go to 32, and then it's going to go against them, and then that short squeeze is what will explode it. And again, because the more shorts there are, the better. So keep shorting it. I don't care. Keep shorting it. So
he's like, make me money.
But I mean, not that it can't go back down, but right now there's not a lot of signals just yet that that's going to happen. And if it goes back down to 32, that's not the worst thing in the world.
No, not at all.
Spot to get long again.
Yeah, good reason to get long. Exactly. But I mean, if you guys look at this, look, resistance pulls back, breaks a little bit higher, resistance, same area here, right? Look where we pulled back, guys. Look left. Look at this right here to this same resistance as support, and then boom, big bullish engulfing candle. And so now we have a higher high here and a potential higher low here. We have to wait till we break out if we get it. But, so, I mean, like Fibbo just said, that there's not a whole lot going on here. It says it has to drop on down lower. Matter of fact, right now it says it's probably going to break out higher. Now that can change, but the fact that you're finding support right there where you had resistance and you had that big move back up there, I mean, it's coming in, right? By the way, I'm sorry, this is not actually a higher high. This stopped just short of that, I believe, under that there. So, yeah, what other chart you got here, man?
I got a whole bunch of them.
By the way, somebody just said killer shirt, Swanee. Just saw them a couple of weeks ago. Matt Tripoli said that.
Yeah, nice. Yeah, I got a lot of tool apparel. The next one is ETH. Another interesting thing going on here. We got the bull zone back here, way back when. Worked its way up. Actually took some profit. I think I bought again around 1750, and that long I'm actually still in on. And I actually bought again later on, but that's a whole bunch of other stuff. But the same kind of scenario that Bitcoin was doing was this previous shallow fib. So the red fibs, which was this bullish threshold, when it went into the bear zone here and worked its way back down, the previous shallow fib for me is where the buy is. And I actually bought when this hit. It actually worked its way back up and came back down and hit again, which is fine. And it's finding buying interest there again, which is kind of holding up. So I actually bought at this level along with my 1750. So yeah, I think it averages out about 1833, something like that. So even if this ends up breaking down and we get 3 settles underneath this, most likely I'll take a little bit of profit, or I mean, unless it goes absolutely gangbusters and it goes straight down. But most of the time that typically doesn't happen. And if it does, it goes super quick and it comes back up out of buying interest. But right now we're still finding some buying interest right at this point. So the upside targets are still in play. This target actually hit. I missed it based on where I'm trading, but it didn't hit where I wanted it to hit. So I actually ended up staying long. I wish I would have taken profit at that point.
He's just a little bit before.
I just missed it. I was busy, and I would have went to market knowing that it was that close. But I wasn't around, so I just maintained that's the ones I had at 1750. I was going to take that profit, but I didn't. So I just left it, bought again. But the main thing right now is it's still sideways to higher. We're still finding buying interest at this point. And that's why I'm buying at the previous shallow fib while it's in the bear zone, because that's the line in the sand right here. So if this ends up breaking, then 1781 and then 1562 will be the next ones to the downside. But I like the upside possibilities here, where the target at 2336 or 2136, and then another target way up here, which is another 200%. Basically, the way this works is back here was the 100%, and once this made a new high, the 200% became a target right here. Once that target hit, then I want to go back in history to find the next one, and this was the next significant level. Brings out this zone right here, and this dotted line is where the fib extension target was, and that hit within this zone. But then it's the next 200% is the target to the upside if this ends up breaking back up to the upside. Sort of the same thing with Bitcoin. You get to that certain level, if it breaks above there, it should go up pretty good to get us that movement that we need to get up there to that 2482. But it's finding buying interest where it should. And another reason why I like buying the 4 hour at the previous shallow fib while it's in the bear zone is because the shallow fib is hit in the bull zone on the daily. So I actually bought the daily down here when it hit the shallow fib for my next targets to the upside. And the same kind of thing, the target hit right here actually went up a lot further, but the target hit, go back in history, this is a significant level that matches up right at this point that gives me the extensions. And then that's where that target came from right here as it hit, and then came back down and bought. And then my next target to the upside will be 2433. So nice. Same kind. It's same but different. I mean, you're kind of getting the same kind of look that Bitcoin has, to where it's in that pressure cooker area. That's kind of holding that 4 hour support in the bear zone, but it's also in the bull zone of the daily. So you can kind of get that lift if we get enough buying interest off this shallow fib. And right now, with the price coming down, the AD, the positive directional index is also coming down, which it should because price is dropping. But the red negative directional index is not crossing the green yet. So the bulls are still maintaining control of trend. So even though we've come back, it's a bearish correction in an overall bullish market. So that's why I want to buy that shallow fib and stay long this market going forward. So that's where I'm at on ETH. So you're getting that emotional test right here, because everybody's like, "Oh my gosh, this thing's gonna crash."
Yep.
But it hasn't yet, so I can't take them. I take the emotion out and let the program tell me if it's going to be the other way or not. Right now, it seems to be holding. Yep. It seems to be holding, but of course it can correct further, of course, but because we don't really know where the market's going to go. We just do that. We just use tools to give us the best educated guess, I guess you could say.
Exactly.
Forward, so.
Let's see. Brian's asking real quick, how do we determine how much to trade with? Say you have 100K. Do you trade with 1, 3, 5, 10% per trade? So the way I teach it, Brian, is that you back into your position size.
Just kidding.
Sorry. All right. So you go in and you say, okay, how much am I going to risk? You have to do proper risk management. How's I going to risk? And then from there, you say, okay, well, if I enter here, where's my stop loss going? Where's my target going? All that kind of stuff. And what you do is, so where you enter and where your stop loss is, that cannot be greater than how much you're risking. So if you're risking 1% of your $100,000, that means that if you hit your stop loss, your position size has to be of the size that you don't lose more than $1,000 on that trade. That's how you do it. See, this is what you're asking is the way most new traders come in. They think about position size first. And position size you should back into based on your risk management. So based on your stop loss and how much you're actually risking tells you then how much you need to actually, how large your position size has to be. If you do it the other way, where you just kind of jump in there, like most of us do, like I did when I first started, like I'm sure Brian probably did, Fibaswani did when he first started. You just kind of jump in there and you just balls to the wall, everything on there, as much leverage as possible. Yeah, you're going to lose your money. But that's what most people do, right? But that's the wrong way to do it. Always back into your trade based on your risk management and how much you're risking on it. Remember, trading, guys, I keep saying this. I want you guys to remember, trading is a game of losing, okay? Trading is a game of losing, not a game of profits, okay? And because you are going to lose. So you have to understand, how do I minimize my losses the most intelligent way, the most proper way? And the person who does that best is the person who wins the most, okay? So that's a huge point. If you do that, then you understand it's all about risk.
Huge point you're saying right there.
Yeah.
That risk, that position sizing, backing into position sizing. If anybody gets anything off of this call, it's that right there. I mean, that's a big deal.
It's huge. Huge.
It's huge.
It determines whether you're going to go on or not.
Yep.
Because I know me, when I first started, 28 years ago, if I had $1,000 in there, my trade was $1,500. And I got hit that stop loss a lot. And I lost a lot of money back in the day when I first started. So let me see here. Let me pull up my Ethereum quick here. I'll just take a little bit larger look. I'm still generally looking at this. It's what I've been talking about since the June low of last year. So, right here, 1, 2, 1, 2. Could this be a 1, 2, 3, 4, maybe a little bit higher for a 5 as a leading diagonal? It's possible. It's possible. But until we actually get that, because diagonals are the exception, not the rule. You're more likely to get a 1, 2, 1, 2 than you are to get a leading diagonal. So
I use the diagonals as guidelines more than rules.
Yeah, exactly. So for me, I'm looking this still as 1, 2, 1, 2. You can see we're just hitting this resistance here. We're waiting for the pop. If we can get the pop here, and this is correct, and it should be. You're getting a consolidation up toward resistance. This is all accumulation here, by the way, guys. This is and this looks nothing like the Wyckoff schematics you're going to find online. But this is what I keep telling you guys. If you want to learn Wyckoff, you have to do it properly. Stop just half-assing it with a little thing online, and then this looks nothing like it. You're like, what the heck am I doing? Well, that's because those schematics are just meant to be an idealized version to help you understand what the different areas of the range are and how they play out. That's what it's there to do. But it's not there to say this is what it's going to look like. This is accumulation here based on the volume and price action here. And so this length of time, we've been going sideways here for 500 and a little bit longer here. Getting on 532 days now. That's a long time, guys. That's a lot of accumulation. So the longer this accumulates here, the bigger and stronger and more impulsive the breakout's going to be. So that's what I'm looking for here. Long story short, ETH, I'm just looking for a breakout here to pop us up. Based on this 1, 2, 1, 2 here, we have a 1, 2 minimum wave 3 target at 4,700, which puts us right around the all-time high. But that's just wave 3 of 1, 2, 3. Okay? So that's what I'm looking at there on that.
That's
Just
a
keep it simple.
weekly. That's a weekly pressure cooker. I like it.
Yeah, I mean, that's huge, man. It's everybody,
That's a big one.
everybody all bearish down here. Oh, Ethereum's down, all upset because it hadn't broken out. But remember, this was the swing low here, and it went up since then, right? Bitcoin went up and came back down to make a new low here in November. So Ethereum made a higher high or a higher low, and Bitcoin made a lower low at there. And so Bitcoin's kind of rallied up more since then, but Ethereum was already up over here beyond Bitcoin. So, but people not paying attention. They're just looking at, oh my gosh, you can't break out, and think it's the end of the world kind of thing. But it looks to me like we want to do this, and it's that major area of support resistance there. We may get a pullback in here. That's fine. I'm looking for the breakout there on that.
Yeah, flip over to my screen real quick.
Yeah, I was going to do that there. I got a question here. It said, for Bitcoin, what do you think will be the high for the current 4-year cycle? Whatever it gets at, man. I'm not into giving like these great big kind of prognostications and whatnot. But I mean, I think I've been saying I think we'll get at least probably 150 to 170,000 at least. I've seen reasons why we could potentially jump to maybe 400,000 even, but I'm not going to sit here and say it's going to be one or the other or anything like that. Yeah.
No, I just wanted to show my ETH weekly since you were looking at it. Basically we went into the bull zone right here on the weekly. Set the fibs. I mean, it's been, like you said, that sideways as it's going up through that diagonal that you had. It's above the previous shallow fib. I don't know if it got 3 settles or not. I have to look at it closely, but it's maintained the bullish zone, even though it came back down. But I like the break here, and the target matches my previous, the 200%, which is usually the upside target for this previous zone. And it matches the trend line objective that I have, taken the rate of change from the highest to the lowest point of the trend line. It matches up perfectly at 59.80, which is way the hell up there. But what I wanted to see was where my target at 59.80 is, and then go back over to your screen. Where was your target to the upside?
Actually, on the wave 5 there would be up here would be right around 6,100 or so.
Okay.
So again, within a few $100 of yours, same as it usually is. So yeah.
Perfect.
Yeah, so that would give us then the larger wave 3 up around there.
Let's just get that higher high off that horizontal you got right there, and let's do it.
Yeah, exactly. Let's see here. Do you use leverage at all? Understand anything higher than 5 is usually frowned upon? Yeah, I mean, most professional traders do. If you're new, don't. Because what you're going to do is, again, most people get in and they don't even position their, they have a correct position size, is what I was talking about earlier. So if you've got too large a position size, adding leverage just is going to exponentially increase the risk you're taking on well above where it needs to be, well above. For most traders, especially new traders, you should use leverage to basically use other people's money. Not that you're trying to get a greater return on the overall movement, but you're getting a greater return on the cash that you're actually putting in there. So if you use like 10 to 1, you can use 10% of what you were going to use. Let's say you were going to use $1,000 position size, and you want to do 10 to 1 leverage. You could use $100 position size and still get the same amount of movement, right? You're still getting that same overall dollar return, but as a matter of how much you're actually investing, how much you're actually putting into it, instead of getting a return on $1,000, you're getting that return on $100 you're doing in. By the way, also when you're using crypto, using leverage that way helps de-risk that counterparty risk. Anytime you have your money on an exchange or something, anything can happen, right? Hacked, the exchange goes down, like up in Canada there, and the guy dies, and you can't get in and get your money out and all that. So those would be the biggest reasons, especially if you're new to use it. Once you get where you're consistently profitable and whatnot, you can move it up a few times. I wouldn't go crazy. I see people all the time, 50, 100 leverage, and they might get a trade, a win here or there, but most people are just going to lose it all. They're going to make more losses than wins that way. And think of it, it takes one loss and you're going to lose a huge bit of what you have. So That's the way I would do that though.
Yeah, I'm a little different on that. I'm a spot trader mainly, but unless I'm using futures. So if I'm doing a futures contract, that's my leverage right there anyway. So
Yeah.
So most of the time, like if I'm trading a stock or crypto like Bitcoin, I'm typically spot. Every once in a while, I'll do a little leverage here and there, but not very much. All my leverage comes from the future side of things, and I do not recommend futures trading for any new people at all ever until you get really good at what you're doing, because futures contracts could rip you a new one.
Yeah, because like you said, the leverage is in it already.
Yeah.
Yep. Exasperate them losses.
And the leverage in futures is pretty hefty. So
yeah,
it could,
for sure. Let me see here. How can we determine roughly when the top of the cycle would be? Well, if it's Bitcoin, the usual, multi-year out kind of thing, price rallies 2 years, then pulls back, right? I mean, so just that would be the easiest way to do it.
Yeah.
If you're talking about when it would be, I'm going to tell you what, guys, I've tried throughout my 20 years to really understand timing, and I've never been able to really get it where it's consistent. So people that ask me about timing anymore, I just tell them, listen, I don't really worry about it. I look at price levels. I might try to put a little bit out there with timing, but it's always taken with a grain of salt. For me, the most important thing are the levels. Do we break through our validation level? Okay, then we got our target. Did we break through the invalidation level? Okay, we're out. We're looking for our next target. So however long it takes to get there.
I got a lot of interesting ways of doing timing. So if anybody needs timing, I can help them out with that. Not that I can teach them, because it's pretty difficult.
Yeah.
And then again, I don't trade my life off of it. It's a guide, just like
there's so much you have in there. Yeah.
But I do a lot of timing stuff, just because a lot of the times I've done it for clients with my day job, but I found ways of doing some pretty interesting timing from a macro level and done pretty decent with it. Now, are you going to be right every time? No. Like this last time I wasn't. I had a 48K call by the end of June, but it found some resistance and sold us off. But the 48, it never really busted down structure, so I was off on my timing, but the 48K call is still there.
Still there.
We haven't broken structure. Now the 3 times before that, I did hit it pretty nicely. I hit a couple lows. I hit I didn't hit it exactly, but the 69K high was pretty good. Just it's not perfect, but it's something. Or just wait till Jim Cramer says to buy, and then top.
Yeah, there you go. Right, and do the opposite. Right.
Just kidding. Don't do that.
Let me see here, real quick. Brian's got a question. He says, macro-wise, is a reverse market crash where everything skyrockets up for several years, then unravels in a depression still on the horizon? What would you consider a safe haven asset in the scenario? Yeah, I mean, for me, again, that's been my primary is that we get into this deflationary bust. And now, of course, again, we're looking for it to go higher right now, still to do out. But the other side of that is, well, technology is deflationary anyway. And so do we actually get that? Or do we have this new kind of thing coming in where this cycle is extended for another, few decades or something? And I honestly don't know which to go. My primary is still that we get this blow off top, just in the markets in general, in the next few years. And then we get some deflationary type bust. Remember, the stock market, 1929 was when the Great Depression started. The Roaring 20s were before that, right? We had a pandemic in 1917, 1919. We had one in 2021 here. I mean, there's a lot of similarities. It's kind of eerie, right? But we're coming up on that 100-year mark of when the Great Depression started, here in another 5 years or so. So, I'm open-minded. The good thing is, guys, listen, the good thing is, if you're a trader, you can make money whether the market's going up or down. You can short whatever. And if you have difficulty doing it on stocks, you can still trade the hell out of Forex currencies, right? Makes it easy to short and long currencies there. Just don't get caught up in the leverage too much, right? Or, crypto, if you can short a crypto. A lot of people in the US, we can't really do that, depending on where you're at, right? But yeah, still my primary, but I am open to the idea that maybe we get this because of the huge technological advance happening here over just the last few years and the exponential increase in that over the next, 5 or 10 years here, does that maybe extend the cycle a bit? I don't know. We'll see. So what we got here, man? What you got? Get another chart?
Yeah, I just was looking at gold is another one that's been kind of working.
Kind of works.
I mean, you would think it would start rallying with the rest of it, but it really hasn't. The went into the bull zone. So with this marked right here, the previous shallow fib was at 1954 right here. So when it went into the bull zone after 3 consecutive settles, you would have been buying right around this level, which is around 1960 or so. And then the target for that is it depends on what you wanted to do. The 100% could have been the first target, and then the next target would be the 2005, which is the top of this zone here. So right now, with it making the high and coming back down, the shallow fib at 1979 would be another buy. Didn't quite get there just yet. Still maintaining the bull zone. So if you did play this the way you're supposed to, you would have bought it, sold it at 1985, and then came back down. Probably bought it again because let me see if it would have been. Nope. Yeah, it wouldn't have hit. So the moving it up here would be your next buy, and then the next target at 2005. So right now, bull zone, everything's working the way it should. I'm just surprised it hasn't moved as much, especially with the ADX as strong as it was.
Yeah.
I thought new highs would be made there and at least hit this fib target, but so far it hasn't really done it. But it's still maintaining the structure, so maintain the longs. And then on the daily went into the bull zone here, and that was marked. Previous shallow fib was back here, so you already had 3 settles. So once this went into the bull zone, you would have bought. You could have done a really quick trade to the 100, but the next level is going to be this target out here between this zone. Didn't quite get there just yet. Worked its way back down. Maintained the bullish zone as it touched down here at this previous. Basically, it was a full retracement is what happened. We broke up, hit the 61.8% level, went down to a full retracement, and then it's back up. So if you actually bought this, you've been waiting a while as it goes back and forth here, but it's still bullish. So upside targets still remain on gold. So that's where I'm at on that. You want me to go on some other charts before we go on to, or do you want to look at gold real quick?
I can just pop up gold here real quick. Yep. I've got gold and silver here. Gold. Oh yeah. Yeah, again, coming the idea this is a 3, this is a 4, and we're heading up. This is wave 1 and 2 of 5. Locally here, looks like we've got a 1 and a 2. We had between the 38.2 and 50% pullback. We've got a nice little rally overall in the weekly here. So we had a big weekly drop last week right into support at this triangle resistance, triangle support here now. And then we're rallying back up today. So, again, looking for that to break out higher there. Overall, I've got that large wave 3 up there, 3 of 5, up there around 27.50. So locally, I think still looking good. Again, could potentially get, a test of the highs up here before we get a real pullback. Or if we just get a decent bit of pullback here, we can really kind of see that move come out, that breakout that you were looking for through locally, and then even up through the all-time high up here. So, yeah, I mean, it looks nothing bearish about it to me at all. Looks good. Looks good. Again, we've got an ABC with a triangle here. We broke out above that, so we should be looking to continue higher there. And then silver, again, silver, same kind of idea. 1 and 2 done. Bullish engulfing weekly candle right now after this 3-wave pullback. So we should be breaking out. We should be on our way to break out higher. Wave 3, minimum expected target up there around $40.99. Wave 5 gets us up minimally around $48, which gets us pretty close to that 50, right? So, yeah, that's kind of what I'm looking at on that.
Cool.
Matt, thank you so much. We appreciate you, buddy.
Yeah, the other one was is the dollar on DXY. Been in the bear zone for a while here. Worked its way down. This first area in here between 104.48 and 104.71 was the area of at least the first target. If you would have shorted it, that would be the area you'd be looking at to the downside here. Then the next target was the 200% at 103.53. And that's kind of that first area that I would consider going long. But then again, I'm looking at some other things on here. And if you take just this trend-based extension off of just this move right here, it gives you a 103.11 at the 61.8% level. But the 102.38 is the 100%, which matches my target off the zone off these previous threshold here. It actually comes from a threshold that started back here. And so I take that as a significant level within this zone. So to me, I probably won't buy at this target. I'll have to see what it looks like when the price gets to that level to see if I'm going to buy it or not. Otherwise, I'm waiting a while on this one, given that we're in the bear zone and still working to the downside. And then when you flip over to the daily, we're right on that support at the moment that in the bear zone and increasing momentum on a day over day basis. I can see the 61.8% level being busted to the downside possibly if this momentum maintains for the bears, which gives us a target at 101.85, which would be the full retracement off of the previous. So that 101.85, is not perfect, but it's 102.30 on the 4 hour. So to me, I'm kind of holding off. I still think the dollar could still go down pretty well as everything's still maintaining that bearish structure and momentum on the 4 hour and the daily are still backing a possible move further to the downside. So I'm a little risky for me. So I'm just kind of holding off on my dollar buys just yet. Yeah. And I'm not really in the market to short the dollar right now. So I'm just kind of waiting for the long.
Yeah, we got alts coming up here in just a bit, guys. So we got some alts we're gonna look at here. Again, nothing's really changed with what I've been looking at with the DXY here. We got this 50% retracement up here, and then got rejected. Remember, this was the target area.
Yep.
Got rejected.
We both hit that high pretty nice.
Yeah, it was pretty close. If you kept going up, we were looking a little bit higher there if it did. But yeah, 50%, good retracement there. You can see right here the last few days, 1, 2, 3 days now, 3 rejections here at the S2 pivot on the daily. Working on the bottom here again. Locally, that gives us about a 103.425 target area, based just on the height of this here. But again, like Fibbo's looking at, I think we're probably looking lower overall. We could definitely see a catch right here in this low volume node around 102.5. We could get some sort of bounce, if not a little bit more, bit of reversal before coming down lower. But in terms of daily pivots, dropped down through the pivot, halfway to the S2, rallied up, rejected prior to the pivot, big move back down. I mean, this is a very bearish kind of setup here. And normally we'd be looking at the S4, the S5. So again, it gets us down there at least to the 101 and some change, heading down there. But for me, until otherwise, I mean, it looks like it's a 1 and a 2, and we're heading down lower overall with that. We still have room to drop here on the daily. You can see the RSI hasn't quite hit oversold yet. Stochc RSI just barely into oversold there. A couple of times, hasn't really kind of pushed down into it. But we're kind of coming, if you're wondering right here, we're coming into this sideways. I'm kind of get rid of this. We're coming right into this stuff right here. And so that's why we're getting this support resistance right in this area. Of course, you can kind of draw a line here, again, looking left. Right there, this previous area support resistance coming up through. And you see that's just where we're getting caught, right in the high volume node. You got the low volume node just below it. So, again, should see a bit of move further, maybe another bounce, but ultimately should continue on down toward that 101 some change area, I think. Before we get a decent enough rally, at least out of that. So
Yep.
yeah, that's kind of where I'm at with that.
So you want some alts? Is that what we want? Let's go.
Yeah, somebody's asking about some alts there. What else we got here?
I got you were mentioning AVAX earlier.
AVAX been a good one, yeah.
Yeah, this one's been kind of interesting. Went into the bull zone, been in the bull zone for a while. Nice little run to the upside, and it worked out pretty nicely because when you look at this, as this comes up, one thing I always say when in my group, I'm like, time to move the fibs, because every time I make new highs, you get to move the fibs up, and it's fun, in a bull run, So, so if you started down here earlier, you would have bought, went up, came back down, hit, and then again, not exact, but this one right here, as a high, came back down, hit the shallow fib, you would have bought again. But there was also targets in there also. So like,
yeah,
the 100% right here was your first target off your first buy. And then it went up to the 200% and got the buy here. I'll just put this back so it doesn't keep flying all over the place. But so what happened? Like what I do is once it gets to that 200%, I go back in history to find a significant level, and this level right here is pretty good, which was right around that 200. So after that, the next level is going to be the 200 up here, which went to there. There's actually, I took them out of there just to get them. There's actually the 127 to 141 that's inside there. I just took it out because it gets all cluttered in here and it's hard to see. But there would have been targets right in here. You would have rebought, went back up, hit the 200%. It actually went further. But then what happens is once this breaks the 200% here, then you got to go down to go back into history as another significant high or level, and then work on that. And now it's the fib extension target here, and then the next target at the 200%. So if this wants to keep the nice run going to the upside, the next buy here on the shallow fib is at 1877. And then the target somewhere in between 2502 and 2685. I'd have to go back and see an area. Probably there's a threshold right here. I'd have to go back and look, but somewhere in this zone right in here would be the target once you bought the shallow fib again on here. Now, another thing that people that you could do, because if things get on a nice bull run and it never goes back to the shallow fib, another thing you can do is once you hit a target at a 200%, once there's 3 consecutive settles above that, you can actually get back in long again, because that brings a lot more support in the market. This isn't the best example, but that's generally the case. If so, it went up, came back down, you would have been buying right about here on that. So you'd be underwater at the moment, but you'd also be buying again at the shallow fib, the dollar cost average it, as long as the bull zone maintains structure. And so far it is. So if it wicks down here to get 1877 and bounces, maintains the bullish zone, then you're going to have a nice average going into the next 2 targets. But right now, AVAX has been a pretty good one. A lot of the alts have worked really well in this type of scenario like this, to where it worked its way up. Because Rune was another one. Bull zone tested right there, did not break. So it kept going. And right now, this is what I'm kind of saying at the moment. Like, instead of coming all the way back down to 473 to buy it, we had 3 settles above this 141 right here. So you'd be belong again with this being support, with the target being up here at basically $8. Or you could be a little more conservative about it and wait for a nice correction all the way back down to 473. But if it never does, and it stays in the bull zone, never gets back down there, you're going to miss out on that upside. So depending on your exposure and how much you want to risk, you'd actually be long again this market with a target of $8. If you're following the progression here. I didn't put all the lines in like I do here on AVAX because it gets all kind of crowded, but it was the same kind of thing. Work your way up, find new target, work your way up, find new target. So it's been working out pretty well on that. And the other one I have on here for an alt is INJ. This one's actually, this one went back into the bear zone again right here. I have to fix it, but just like Bitcoin, this previous shallow fib right here at 1471 has been maintaining that bullish structure. So even though it went into the bear zone, it never got below there. So you would maintain your longs, went back up, went back into the bear zone again, but you're still going to use this 1471 as your stop level to watch. And right now it's still bouncing off of that. So, based on how you did this, same kind of thing, just like on a lot of these alts, you've been taking profit, buying back, taking profit, buying back, and it's been working. So if you are long, you're long with it being in the bear zone here. But the upside targets still are in play as long as we don't break down and get 3 settles below that 1471. So when it comes to alts, a lot of these alts are working really well. They're maintaining the key support levels that it should, and maintaining that bullish structure going forward. Like I said earlier, though, you don't want to be buying all of them because
Right.
your exposure could get too overdone. So, because if this ends up breaking, they're all going to break and it's all going to wash out, and it could get you pretty bad if you own like 10 of them, and then all of a sudden all 10 of them are going down and your exposure is too much. So that's why I was kind of mentioning that's why it's like I like to pick maybe 1 or 2 that have really good setups and just kind of run with those. I don't like doing too many because it gets me overexposed. But based on my risk tolerance and what I like to do. But that's where I'm at on some of the alts. So I'm sure you got some nice bullish structures going too on some wave counts, which I have not seen some wave counts on some alts. So it'd be nice to kind of see.
Let me see here. What do
if you have some? I don't know. If you do.
I don't know that I got any here. Let me see here on these couple of ones. Let me check here. I've got AVAX here, and this was just a quick price action thing that I'd shared with our members back when we were down here, talking about the compression as we came down into the lows. We have this nice range, volume falling off, double bottom on here, double bottom target. We hit that easily right there at right around 16.5 or so. And we've kind of broke on out of the of this kind of range here. You can see that the volume and the price action, you can see the supply is expectedly coming in here. You've got a lot more volume than you had the previous week. These are weekly candles. The previous week, you had this nice spike of volume, large candle spread, demand clearly in control.
Yep.
This week, we pop out above the swing higher, up into this this supply up here, and all of a sudden we got a much smaller candle spread and quite a bit larger volume. So a lot more effort, a lot less result coming in there. And so, usually that kind of gives you a pullback, right? If I'm looking here on the weekly, we've got 1, 2. It's possible that's 3, 4, and 5 is done, which would make sense. Again, getting toward that previous swing high area, right up in this low volume node and the high volume node just above it with that thrust. So for me personally, let me see here. If we pull this back a bit, let me zoom in there on the daily. Daily, we're getting bearish divergence up here. We've run the pivots again. That same structure I was kind of talking about with Bitcoin, right? You come in sideways, right at the R1, pull back to that previous support, not getting near the pivot. You take off, and usually you end up getting through that R4, R5 pivot. So this is kind of like that same idea that I was talking about at the beginning of the stream, beginning of the show here with Bitcoin. We may potentially be at this point here where we're ready to kind of pop on off and take off. But yeah, I think overall it's looking kind of done here. Again, even right here with these 2 candles on the daily here, same idea as what we saw on the weekly. The big spike of volume, large candle spread, demand clearly in control. Second candle, large upper wick, small body, greater volume. So again, more effort, much less result. Here we're working on a doji up here at the top. So you've got some supply and demand kind of back and forth, but that supply is coming in. It's hard to tell traders, especially new traders, take profits along the way. Make sure you've got, you take partial profits along the way if you have trouble taking full profits. Because, most of the time, if you haven't experienced it yet, if you're really new, what's going to happen is you're going to think, oh my God, what if it goes up higher? And you're not going to get out. And then all of a sudden you get this big drop, and you either lose a whole big, huge portion of your profits, or you even lose it all, depending on where you entered, right? And you end up negative or even liquidated. Make sure that if you're trading, you've got some way of taking some partial profits along the way. I think it looks kind of toppish here. At this point, again, the idea being we got a 1, 2, 3, 4, and 5 here. If this is 4, 1, 6, 1, 8, that's usually where we're looking for. So 1, 2, 3, 4, 5, maybe. So if this is the top here, I pulled that on the large, we'll put on the smaller time frame here. Initially, I'm going to look at a $14.61. That's 50% retracement, followed by $12.91. That's a 61.8. Is where I'd be looking at initially. Beyond that, we usually look at the 70.5, what's the institutional pullback level at $11.78, or even the 78.6 at $10.82. I mean, that's pulling back. Those are the targets we look for. We're looking for 3 waves on the pullback, though. But man, oh man, if you miss this rally up, you've got a good chance still to get in pretty close, down here around 14 or 12 or potentially even $11 to get that next big push up. And the next big push is really going to be good. But again, looks pretty clear that the bottom's in here. We had accumulation going on for a while here. Nice big breakout rally. So I think we're probably doing pretty good right here. Let me see here. Solana. Somebody's saying something about Solana there. What do I got here? Solana's my baby. That's the one, man. I talked about that.
I'll find mine too.
That was such a great. Whoa, what happened here? Looks like I just lost everything. Give me just a moment. Using the TradingView app. Seems like we're having a. Well, you know what? I'm just going to go ahead and put yours on there, and you can show a SPY or something while mine's trying to do whatever it's trying to do.
Yeah, Solana for me.
Oh, you do have Solana, okay.
Yeah, I just pulled it up. Just looking at it here. I don't know if it's all updated, but right now it is on the 4-hour. It looks like it's testing that bull zone at the bottom here. We still got an hour and 45 minutes to see if it's going to break into the bear zone or not. Either way, you would already be out because you hit the 200% target. So hopefully you taking profit and then you're out. So as it comes down to the shallow fib here, you'd be buying it at 50.59. But if it goes into the bear zone, you're not gonna. So that's a good thing. So then you're gonna wait for a little bit of a pullback. And I'd have to figure out where that would be. But right now, the first level that I would look to buy would be the 61.8% level at 39.72, because that actually matches this previous target hit at 39.65. Because you would have been buying and selling along the way here. You bought on the new zone, would have sold it, bought back, and then sold it again. So, but 39.65 on this target is matching up really nicely with this new 61.8% level to give us a cool, nice little area right here for support. So if this ends up going into the bear zone, that's where I would look to buy on a dip. If it's coming down to that point and momentum's just starting to go nuts for the bears, then maybe you want to wait for a lot longer of a correction. But right now, that's where I'm looking. So hopefully, if you followed this one, you're out of Solana and you took profit and then you're waiting to buy back in. But it'll be interesting to see if we get into the bear zone here based on price movement. But an hour and 43 minutes, it could be at 90. It could be at 18. Who knows what's going to happen? But right now, it's actually a good scenario because once you take profit and you're working down to a shallow fib, but it flips into a bear zone, then you're going to wait and it'll keep you from buying it and then it dropping even further. So it's working out pretty good on Solana. I just haven't looked at this one in a little while.
Yeah, no, Solana's been it's just been a buy and hold. I mean, geez, oh whiz, it's been so great.
I mean, yeah, this is just 4-hour. I mean, the other time frames look good too.
Yeah, exactly. I'm still having trouble with the TradingView app here.
Yeah, let me see if I got my
you got on there.
Actually, I don't know. Let me see if I have a Solana daily. See where that one's looking. Yeah, I got one right here. Yeah, target hit. See this is interesting because this one's still in the bull zone on the daily, and then the shallow fib would be a buy at 47.10 on the way down here. So 47.10 is going to be underneath here. So I like to trade them separately. So if this one goes into the bear zone, maybe it'll go down a little bit further to this 39.72. But then this is something to watch here is this the 36.70, I guess it would be here on the 61.8% level. That could be a spot to watch. So if you do buy the shallow fib, which you should based on everything that's going on at the moment, then you would want to watch the zone here if it went into the bear zone to be buying it again back down here. But right now I like it. I mean, everything. Oh, wait a minute. Hold on.
Maybe I don't like it.
No, the fib wasn't at the target. So the shallow fib is actually up a little higher. 49.73.
So it's $50 round number, Yeah.
Yeah. It's still within the zone because once you break this zone becomes support. So up and then see how it came up and then tested right there at the top of that zone. So it actually could come back down into this zone and still maintain support and still be in this bull zone. So that's where I'd be buying on the daily, but I'd be waiting on the 4 hour if it went bear. So that's why I like them doing separate. I know it's kind of weird, but when there's a 4 hour and a daily, I do them separate because the way I look at it is I'm measuring psychology. And to me, someone that's looking at a 4 hour is a different mindset than they are on the daily. So I just look at them separately and just trade them separately. I know it's a lot more work, but I just like to do it. But a lot of people will get into, intermarket analysis and doing it that way, taking spreads between the different times and all that. And I don't get into that. For one, it's just way too much work for me. And I'd rather just do everything separately and just apply what I know to each asset differently and in each time frame differently. So, but that's just me. It's not a golden rule or anything. It's just the way I do things.
Well, my chart's back up here. Let me pull it up there real quick. Again, same chart I've been using, guys, since December, the end of December last year.
That's beautiful.
We had that breakout, long accumulation period here. Again, similar right here. You see what's going on right here, guys? Now, yes, this is a higher thing, so you can look right here if you want, right? But there's been no pullback to this previous long period of accumulation, right? This is February through October, guys. It's like 8 months, 9 months, I guess, right?
That level you're pointing out right there is the pressure cooker that we're looking at right now in Bitcoin and Ethereum.
Yeah, exactly. You can see it did it here, and it did it here as well, right? Yep. So what I was talking about at the beginning of the show, guys, with Bitcoin and saying, a lot of times you're not going to get that pullback, and instead it's going to stick like this and it's going to become really bullish. Or you can even look in terms of the pivots, right? Look at this, guys. Same thing we're talking about here. Come in sideways between the pivot and the R1, rally at the R1, pull back to the previous kind of support area here, and then just rally up. You don't actually get that return to the pivot. And usually what happens is you get a push up the R4 or R5. Now, if we're looking at this, I have I've got a 1-2. Wave 3 has a minimum expected target at 78.25. If this is a local kind of pullback right here, that next target would be right up there around that $78 area. So I'm looking for this. If we can get a nice, impulsive breakout above the R3 pivot here on the daily at around 62.25 or so, I think we run that up to around $78. And then we'll see what happens from there. Is that finally it? You can notice smaller candlesticks here, larger candlesticks as we're getting toward the end of volume picking up. Volume-wise, it suggests this is probably like a wave 3 area, and we're getting up into a wave 5 here. So, because the volume is usually greatest in wave 3. So, just look at this quickly, be like a 1, 2, 3, 4, working on a 5 here to put that up. And that gets us right up there where that wave 3 is. So, again, just absolutely amazing.
Yeah, that's a great chart.
Beautiful chart.
That is art right there.
That looks good. That's the kind of stuff you kind of put there, post on your wall, right?
Yep.
So that's what I got there. I think you do have a S&P chart, don't you, or a SPY or something?
Oh yeah, I got S&P on here.
Yeah, I want to go ahead and try that here, and because we're almost done here.
Yep. 4 hours been bull zone. Went into bull zone, hit the fib extension target, did not come back down. So what happened is, if you want to be aggressive, you can get 3 consecutive settles above this level, which was way up here. So if you did that, you're basically probably pretty close to break even or just in the money on the 4 hour, with that target of 45.75 still in play. You know, if you, I mean, definitely bull zone, momentum still with the bulls. So I still like the upside on this. And if you did buy it, maybe keep an eye on the daily also, just to see how that's doing. So when you look at the daily actually went bull zone. So as soon as you went bull zone here, you would have bought it right there about 45.17, which I have, and I'm still long. It's right at this area where, given a new bull zone, that fib extension target up here, which is basically the previous high within this zone. I still like that possible move to the upside here on the S&P. So to me, it's not done yet until it tells me otherwise. But right now, if you are doing it, kind of risky here, I did not buy the 4 hour. I only bought the daily just because I didn't want to take on that risk, because this was definitely a risky area to be doing that kind of thing.
Yeah, we've had a heck of a run.
yeah, that, and the leverage is pretty freaking insane.
Yeah.
So the I did not buy the 4 hour, but I did buy the daily on this new one. So I'm right there long on that new structure. 46.34 is my target. And then if you're playing on this one, it was 45.75 on the 4 hour. So it'd be interesting to see where your targets are. But so right now I'm still flirting with this over the last 3 days as it's just kind of hovering back and forth. But I do like 36.34 as a target to the upside on the daily.
Yeah, let me see here. I got to try and find this chart now that finally
it's one of those levels where it could definitely start to sell back down and give us a nice correction. But I do like that the daily's in the bull zone, so I'm going to party with it and see what happens.
Yeah, let me see. I can pull up a quick chart. I don't have another chart here, but I'll pull up this one real quick. Again, this was, the bottom where everybody's screaming, limit down, you're going to go crashing. When the market opens.
Wrong. And of course, that's when we were buying.
Yeah, exactly. We were both saying, listen, that ain't going to happen. Let's get long here, right? We had this kind of wedge thing going on here. And we had a throw under of the wedge right here. And then this is what you expect, guys. When you have a proper throw under of a wedge or a channel, this is what you expect. You get the throw under, and then you get this strong move back up to the resistance. And so we got that, and we've broken out, and here we are nearing that swing high with this right here. And so,
that's where I'm nervous, because that's why I didn't want to do the 4 hour and the daily, because it is a risky spot to buy.
Yeah. For you guys that are listening, if you've got a wedge like this, you've got this pullback in this proper wedge, and you get a throw under and, move up and, just breaking out of the wedge, usually your initial target should be right near the top where the wedge begins. That's, regardless of what do you think price is going to break out higher or going to get reject, come down. If it's a wedge or a triangle especially with a throw under, not a triangle, but a channel, usually you're going to get that run back up toward the top area of where that wedge begins. And so that's what we've done here. That's what we had down here. That was overall what I was telling people. And, again, that's been nice. It's been 10%? Absolutely crazy on futures, right?
Yeah.
But yeah, so for me, I'm real cautious here, popping up a little bit higher if we can get a breakout. Again, this is SPY, not the S&P, but same thing basically. 453 and a quarter or so is about where I'm looking, which, as you can see here, it's that resistance that you had prior here and here, right before that gap. So it makes a lot of sense in terms of where I'd be looking initially. If we can pop that, I'd look for a gap fill up here, closer to the 456 area. If we get the gap fill, but again, we've had a couple of moves here, and we're so overextended as we are already. But the weekly still has room. You see here, the weekly Stoke RSI and RSI here still have room. It's just a great area. Overall R1 pivot. It's just a great overall move up off that low there.
Yep.
Down here. So I like that a lot. I got a couple charts here real quick, guys. MicroStrategy, if you guys have been following me, you know, we were talking long off the swing low here. We've rallied up. Wave 5, initial target at 580, potentially 621.70 as a secondary target. Looking at a leading diagonal right now. And that's if we break out higher here. So if we break out higher, that's what we're going to look at. But overall, bottom should be in. Structure looks good. PayPal, I mentioned PayPal on Twitter, X, whatever that's called. Back here, actually, on this day, at the low here on the Friday, the 27th of October.
Nice.
You can look in there. I've got it on there. And I said, you know, if we broke down, I think I was saying like 45 would look interesting. But I said, you know, we're probably, if we're not at that low, we're right there around it. I mean, sure enough, rallied right up off this. We're up about 16.5% already. Fantastic. Nice bullish, impulsive breakout above the daily pivot up toward the R1. Retest the pivot as support, breakout higher. It looks like that might be 5. If not, we got a little bit push higher here, maybe toward about $60 maybe. But ultimately, we should have a pullback. That daily pivot should hold as support, whether we're from there or just a little bit higher. So I think we would come in, fill in this gap here right around 54, 55 here. And then we'd be off again. That should be a 1-2. So if we're done here, filling that gap down there, I mean, basically you're looking 5 waves up at around $73.40, fills in this gap, hits the high volume node. You know, wave 3 kind of hits that low volume node area, pulls back for wave 4, wave 5 breakout. So that one's looking great.
Yeah, good move.
As well on there. So, you know, again, this is what I do, guys. I don't know how many of these bottoms I've called in the last year. Everything from Bitcoin to the S&P to Solana, Link. I mean, all of it's on there, either on these streams and or on these are all the public calls I've done on other people's streams, Windio stream. I've done it on you know, my feed there. Again, we had this call for PayPal. We had Carvana around 3. It dipped a little bit lower than that. Or we had it below 10 and it hit 3 and then rallied up to 50. GBTC, you know, Facebook, Meta was a huge one. That thing rallied like a mother. So, you know, this is what we do at TWC, guys. We do have group coaching over there. We'd love for you to be a part of it. We're going to have a black sale coming up, a black sale. Oh, that did not sound good. Apologize, guys. A Black Friday sale. Mouth is running faster than my brain's running faster than my mouth, I guess. So if you want to get in really inexpensively compared to what we normally charge, be watching for that. We've got a couple of new products we're going to push out as well. And of course, you can get with Fibaswani over there with us as well. I cannot talk, guys. You know what? It's the end of the show. Members.texaswestcapital.com. Follow me on social media if you want to potentially take advantage of a discount for Black Friday coming up. But that's what we do in group coaching, guys. We teach you day trading and we teach you how to forecast markets and whatnot. So hopefully you guys are going to be interested. You'll step up and you'll learn a whole lot. I can tell you right now, if you're willing to learn, if you're coachable, if you're humble to understand that you probably don't know what you think you do about markets, man, the sky's the limit, guys. You're going to get so much. It's like drinking out of a fire hose, somebody said at one time. So we'd really, really love to have you there. But I called SQ as well. Yeah, Andrew's talking about calling things. Andrew got the target. He posted that in TWC over there for everybody before the earnings call. Great setup. That thing's popped like, 30% or something. So, man, oh man, not just me. We got other great calls in there. Mav's in there putting in great charts. Everybody just fantastic stuff. So that'll be it, guys. It looks like Fibbo had to run off. As always, remember the only thing you control in the market is how much you lose. So as I said earlier, before you learn anything else, put your mind to seriously learning proper risk management. Learn how to back into your position size based on your risk tolerance, based on how much you're actually putting at risk. Anything else is going to get you lost. Oh, look, he's back. He's going to say goodbye now. He's going to wave. Maybe he can't hear us right now. We can all pretend we're talking to him and, he won't notice. All right. Anyway, guys, looks like he might be having trouble hearing us. But as always, like I said, remember risk management. That's where it's at. Other than that, the best point of advice I can give you guys is don't take a trade just because there's a chance. You're going to be tempted to time and time again. Don't do it. Look for higher confidence entries. Those that have a couple of different things happening at that area that tells you you're probably more right than not. What that's going to do is it's going to keep you from getting into a lot of really bad trades where you're losing money you don't have to lose to begin with. And much more likely that when you actually get in a trade, it's going to work out. All right? All right. You guys have a fantastic weekend. Thank you so much for tuning in. Looks like, again, like I said, that Fibbo cannot hear us. So we'll all just say goodbye. Have a great weekend. See y'all later. Take care, everybody.